Hey, so I always get asked the question, what is the difference between a sole proprietor and an S-Corp? So I'm going to go ahead and dive into that, and I want to go into a little bit of detail just so you have some good, clear information. Now, the first thing is that you need to know about a sole proprietor is that it is the simplest form of doing business. There's literally no easier way, right? The license belongs to you as the owner, and it relies primarily on the financial resources of you, the individual. In other words, you're not going to go raise capital, you're not going to go potentially take a loan. It basically, whatever you have, you're going to utilize to launch your business. Now, the owner has sole responsibility, so there's no board of directors, there's no RMO or RME or anything like that. It's basically you. You are the business based on your Social Security number. In fact, it runs under your Social Security number. The business income is reported as personal income, so you don't have to do this business return and also personal return. It's all put together as one, and then you only have to pay for the one return, which is kind of a benefit, right? That's not too bad. The only thing is, one of the negative things is that the business ends with the life of the owner. In other words, when it's gone, if you pass on or you just want to sell it, you really can't. It's not transferable because it's based on your Social Security number. It's based on you. It's not like an entity, like a corporation or anything like that. The other thing that's interesting is the reputation can be stolen. In other words, let's say that you build a business, right? And your business is going strong and you're killing it. You're out there making great money. I mean, you're building a reputation. Your website's being looked at. People are calling you like crazy. And then all of a sudden someone sees, well, hey, this person is out here and all they have is a sole proprietor. I'm going to incorporate the name, and then that name then becomes protected within that state under that corporation, and then they begin to function and steal your reputation from you. All this energy and time that you've been putting in, working on it, building it up, and now it's swiped away from you, and you don't really have any legal recourse, right? So be careful of that. The other thing is it's a pass-through entity. So what that means is it's going to be taxed when you pull money out at 15.3%. That's a lot for your self-employment taxes. You're going to be covering all your Medi-Cal, all your Social Security for everything. Whereas in an S corporation, you're actually able to draw dividends, which we're going to talk about in a little bit, where you only pay 7.65%. So we'll talk more about that in a little bit. Now, so keep in mind, you're going to pay a lot more on self-employment taxes. So when should you transition to a corporation? Well, any CPA worth their weight in gold will tell you when you hire new employees or when you want to create a corporate veil, something to protect your assets. Remember, a sole proprietorship does not protect your assets. So if you do something illegal in the business, or if for some reason you do something by accident and it causes a lawsuit, or someone gets hurt within your store, if you're running under a sole proprietor as a store or any kind of place where you're at a location, even if you go, by the way, you have a sole proprietorship and you go to a location, that location then needs to be protected by your general liability insurance. But if for some reason you get sued for more than your general liability insurance, then they can go and attach all your assets, your home, your cars, everything else. So you want to be careful because, again, there is no corporation veil. Of course, with the corporation, then only it gets sued and you don't lose your personal assets. You also want to be able to make sure that you protect those, but also to save money on any kind of transfer of bank accounts, or if you have any specialized licenses or stuff like that, or certifications. A lot of times when someone transitions to a corporation, they got to close down their bank, and then they have to open up a new bank account, and then they have to begin to connect with their CPA, bookkeeper, let them know of all these changes. And if you have certifications written under a specific name and you need to change that to the corporate name, all that can just be tedious and cause problems. So I just personally don't recommend that. Now, I do recommend, though, because identity theft is the #1 crime worldwide. If for some reason you do have a problem or an issue, someone's coming after your identity, one of the things you can do to protect yourself with a sole prop is exchange remains your Social Security number with an ITIN number to help you out. At least that'll, or I should say an EIN number, that'll help you out, right? Now, let me go to the S Corporation and show you some of the differences. So right here, you can see an S Corporation in my illustration here. It's a separate legal entity. So as a sole proprietor, you are that entity. As an S Corporation, that's a separate entity than you. It's like birthing a business. It gets its own identification, just like if you have a child, it gets its own Social Security number, right? Now, the license or any certifications or anything that you do is then going to belong to that corporation. It's designed for a smaller business. Now, how do you know when to go to a C Corp? I won't go into great detail right now, but basically, if you're going to go over 50 to 100 employees, maybe a C Corp's better. There are some tax stipulations that are both good and bad on either, but we'll deal with that one at another time. But I want you to know that this S Corp is for a smaller business. So if you're just getting started and it's just you could literally hold all three positions, president, secretary, treasurer. So it's still based on you, but it has its own entity structure and its own identification with the powers that be. Now, it reports business income or losses on personal income, which is nice because you can reduce your tax burden. But here's the cool thing. This is what makes it so beneficial compared to a sole proprietor. Well, a couple things, but this is one of them, is that the tax burden when you pull out a dividend from money from your bank, from its bank to your bank after payroll, then that dividend is taxed at 7.65% for your self-employment instead of 15.3%. That's beautiful, because you're saving a ton of money. Let's say you pull out $100,000 in your sole proprietorship, you're gonna pay $15,300 in self-employment tax. If you do that in a S Corporation, you're only gonna pay $7,650. You've legitimately reduced it in half and saved on taxes. Now, the cool thing is it's a pass-through entity, so the FIT tax passes through to you. So basically the 0% on FIT tax or federal income tax, because it's passed on to you, and you can reduce that, of course, by having good write-offs. And here's a beautiful thing. It has asset protection, which protects all of your assets, your houses, your cars, all that, because it's separate from that. And finally, it's perpetual. You can sell it, you can give it away. If you pass on, you can give it to your spouse, or you can give it to a child, but with an S Corp, you can't do that. So my estimation, if you're gonna start a business, my personal recommendation is this: always go with an S Corp over all other things, okay? That's gonna be the best scenario for you. That's the way you do business. I have several of those. If you have any more questions, give us a call. We'll help you out. Talk to you later.